PayPal is no ordinary company, and this is no ordinary story. It began with a young, inexperienced team who boldly took on the banking giants and reshaped how we handle money. While their success in revolutionizing digital transactions is remarkable, there's a darker side too, one filled with broken promises, widespread user exploitation, and a series of scandals that have left many feeling betrayed. A platform that promised to make life easier has, for some, become a source of frustration and mistrust, tainting its once innovative legacy. The once promising company now faces the consequences of its actions and its troubled legacy. Let's uncover how PayPal's rise to success led to its dramatic downfall. In the late 1990s, the Palm Pilot was the tech marvel of its time. It redefined personal organization with its revolutionary features for managing contacts, schedules, and notes. The Palm Pilot was the must-have gadget for tech enthusiasts, embodying the spirit of innovation. But as we moved into the 2000s, the scene was ready for another revolution. Enter PayPal. Launched in 1999, PayPal introduced an innovative idea: sending money through email addresses. This concept was a breath of fresh air in a world burdened by cumbersome banking processes. It quickly captivated users, who embraced the simplicity and efficiency of handling transactions with just an email. As technology evolved, the Palm Pilot's influence diminished, replaced by more advanced devices. Yet, PayPal's innovative approach to digital payments continued to gain momentum, establishing itself as the gold standard for online money transfers. Yet, despite its impressive start, PayPal's reputation has suffered over the past few years. Once a powerhouse in Silicon Valley that helped launch major tech successes like Tesla, LinkedIn, Yelp, and YouTube, PayPal now grapples with significant negative feedback. It holds a dismal 1.3-star rating on Consumer Affairs from over 4,500 reviews, and a similarly poor rating on Trustpilot with more than 28,000 reviews. Complaints are rampant across online forums, YouTube, and social media, suggesting that the company's decline might be accelerating. Many have been anticipating PayPal's decline, and it seems that moment might be near. But the question is, why? To get the answer of what's gone with PayPal, we need to examine the internal changes that have unfolded over the years. PayPal's rise began with its visionary founders, Peter Thiel, Max Levchin, and Luke Nosek, who started the company as Confinity in 1998. It later merged with Elon Musk's X.com, adopting the name PayPal. These pioneering minds, many of whom would later become billionaires, set out to revolutionize online payments. Before PayPal, online transactions were a hassle, relying on physical checks or money orders. PayPal's innovative approach allowed users to handle payments through familiar institutions like banks and the US dollar, a game changer in the financial world. The company's early success was driven by its ambition and groundbreaking innovations. PayPal was ahead of its time, implementing CAPTCHA to combat online fraud long before Google did. These smart moves helped secure PayPal's place as a leader in digital payments. However, as the original founders' influence waned, complacency began to creep in. The company's early explosive growth, handling $3 billion in payments and 189,000 daily transactions just 3 years in, didn't translate into profitability. To attract venture capital, PayPal went public, raising over $61 million on its first day. In 2002, eBay acquired PayPal for $1.5 billion in stock, making it eBay's primary transaction service. While this partnership spurred significant growth and global expansion, it also marked the start of PayPal's decline. With the founders leaving and eBay taking control, PayPal's trajectory began to shift. Despite continued growth under eBay, with 100 million users across 190 markets by 2010, cracks began to appear. By 2012, PayPal processed over $145 billion in transactions, accounting for 40% of eBay's revenue. This success led to PayPal's spin-off as an independent company in 2014. As an independent entity, PayPal encountered new hurdles, especially in security. The company had always struggled with fraud, losing millions to cyber attacks. Despite significant investments in security, vulnerabilities persisted. A major flaw in PayPal's two-factor authentication system, discovered in 2014, had been present for 6 years, severely damaging the company's reputation. Simultaneously, customer service issues began to surface. As PayPal dominated the market, user support fell by the wayside. By 2016, the company had one of the worst customer service ratings, a 1-star score on Consumer Affairs, and a troubling reputation for siding with scammers. With nearly 95% of reviews being negative, it was evident that PayPal was facing serious problems. But it gets even worse. After hitting a peak in 2021, PayPal has seen its stock plummet by 73%. While it's not unusual for big tech to face steep declines, the recovery trajectories have been starkly different. Many tech giants have bounced back, reaching new highs, with Nvidia being a prime example. PayPal, on the other hand, has continued its downward spiral, even as the broader market soars to new heights. Currently, PayPal's stock is hovering near its IPO price of around $35. When adjusted for inflation, their initial price was closer to $45, making the $60 current price seem almost reasonable in comparison. This downturn isn't limited to stock prices. PayPal's fundamentals are equally troubling. Active accounts have been stagnant or declining for years, and net income peaked back in early 2021, a full 3 years ago. The situation worsened in 2022, when PayPal reported a staggering loss of over $300 million. From mid-2015 to mid-2017, PayPal's stock value was stuck in neutral, but starting in 2017, the company saw a major rebound, with its stock doubling to hit $110 by 2020. This surge was fueled by expansion into new markets like China and strategic acquisitions, including TIO Networks and iZettle. The pandemic of 2020 gave PayPal an additional boost as e-commerce exploded, sending its stock soaring to $300 per share. Yet, behind this meteoric rise lay underlying problems. PayPal's rapid expansion, coupled with mounting cybersecurity issues and deteriorating customer service, exposed the company to vulnerabilities. Despite appearing to be on an unstoppable growth trajectory, PayPal's business model had critical flaws, and those weaknesses are now glaringly apparent. Compounding these issues are PayPal's high transaction fees. As of the latest updates, domestic transactions 3.49% plus a fixed fee based on the currency. International transactions 3.99% plus a fixed fee based on the currency. Currency conversion fees up to 4% over the base exchange rate for international transactions. This means that for international transactions, the total fee can easily climb to around 4.99% or more depending on specifics. For a Canadian seller on eBay with $500,000 in annual sales and a 10% margin, these fees can add up significantly, surpassing earlier rates and adding further strain to an already troubled financial landscape. And as we dig deeper, it's clear that these issues are just the beginning. We're only scratching the surface of the problems PayPal is facing. PayPal's troubles aren't just about security and poor customer service. The company has also faced major issues due to controversial political decisions. Instead of focusing on its core service of transferring money and offering loans, PayPal started to impose its own beliefs on users. This shift began when PayPal began banning controversial figures and freezing funds from certain political groups. In 2018, they made headlines for banning someone linked to the gay frogs controversy. This was just one example of how PayPal, like other big tech companies, started to meddle in political matters. This became even more serious when PayPal announced a partnership with the Anti-Defamation League, ADL, in 2020. They said it was to protect marginalized communities by cutting off money to extremist and hate groups. But this meant PayPal could freeze accounts based on the ADL's recommendations, which many found concerning due to the ADL's controversial history. For instance, in 2017, the ADL criticized PewDiePie and praised Disney for dropping him. By 2020, some groups were calling for a boycott of the ADL because of its extreme left stance. Despite this, PayPal continued to trust the ADL to guide their decisions, which backfired badly. Meanwhile, PayPal's business model was starting to crack. Although they grew rapidly during the pandemic, they spread themselves too thin, leading to a decline in revenue by late 2021. Competitors like Google, Amazon, and Apple launched their own payment services, Apple Pay and Google Pay, that fit seamlessly into their ecosystems, making them more attractive alternatives to PayPal. In September 2022, PayPal faced backlash for banning accounts linked to the Free Speech Union, a group supporting free speech. Even though PayPal reinstated these accounts, they then introduced a new policy that fined users for spreading misinformation. This move led to a huge increase in searches for delete PayPal and a 6% drop in their stock value. PayPal had to backtrack on this policy after seeing the negative impact on their business. Unexplainable bans. And as we are talking about in-depth problem, what if I tell you PayPal is not even reliable? And now you must be asking, why can't you count on PayPal? The answer lies in their arbitrary ban policies. Accounts can be banned at any moment without warning. You might suddenly receive an email stating you can no longer do business with PayPal. Even worse, you may be unable to access your remaining funds for up to 180 days or 6 months. Attempts to reach their risk and compliance department usually lead to vague responses like, your account was permanently limited due to a change in your business model or deemed risky. For a more detailed explanation, you'd likely need a lawyer to issue a subpoena. So, why does PayPal impose these random bans? Some speculate it's a tactic to eliminate accounts deemed too costly or troublesome to manage, such as those with frequent chargebacks. Ironically, this undermines PayPal's own selling point, paying strangers and getting refunds if things go awry. But using this refund feature too often might put you on PayPal's bad side. Another theory is that PayPal bans accounts based on political views. Many banned users have shared controversial political opinions, journalists, commentators, and media figures included. Even a seemingly innocuous social media post could trigger a ban. This may sound like paranoia, but in October 2022, PayPal did update its policy to ban messages, content, or materials that could pose a risk to user safety or contain misinformation, with $2,500 penalties for infractions. After facing backlash, PayPal retracted this policy, claiming it was posted in error. Was it really an error? You decide. What's clear is that PayPal has a troubling track record of banning accounts with little transparency, a concerning practice for a company that claims to democratize finance. In the end, while regulation might help address some of PayPal's issues, it rarely offers a complete fix. For PayPal to genuinely improve its reputation and business, real change needs to come from within. One obvious area for improvement is customer support. It seems that PayPal's dispute resolution teams often focus on quickly closing cases and sticking to protocols rather than getting to the heart of the issue and making fair decisions. This should be a basic expectation, but the numerous complaints online suggest otherwise. As for their fees, while they are on the high side, cutting them might not be the answer. It's not just about the fees, it's about the combination of high fees and poor service. Many companies charge premium prices but offer exceptional service, earning customer loyalty. Take Apple, for example. They charge top dollar but are highly regarded by their users. PayPal could benefit from adopting a similar approach. However, as long as there's a significant disparity between what PayPal charges and the value customers perceive, their reputation is unlikely to improve. But that's just my take. What's your view on PayPal?